kind of playing those.
Now, hi everybody, this is David Skrinka. A little different here. I'm doing this from my living room, not my office where I usually have my sign. So anyway, I've got Edward Kelly. He is the CEO of Inca One. We've had him before. So Inca One just had some exciting news today, which I'm going to share right now. Wow, 1 second. I 1 second. This is that's 1 second. Okay, right here. Here it is. So they announced that they have third quarter sales of 9.7 million, which Edward could probably tell you is a record. And here's a year-over-year growth, which you can see the deliveries and processing are up 41% and 49%. The production is up 17%, and the sales are up 26%. So if you want to tell us a bit about how this happened, I know you've taken out you took out I think quite a sizable loan to ramp up production, but that should be easily paid back with the new production. And tell us what this means going forward for the company. And by the way, with Inca One having this and these increase in sales, plus only having a $14.4 million Canadian market cap, I think that means that they're vastly undervalued. You do the quick math, basically 10 million times 4 is 40 million in sales a year. And yet they only have, a 14.4 million market cap. And it should be something that's probably closer to, my opinion, like 100 million. Can you give us an example of another, first of all, before we start, another company that has a similar model to you? And I could pull it up and we could show just the divergence in valuation.
Yeah, sure. Well, to start off with, you wanted to do that. Our direct peer in this space would be Dynacor.
Yeah, that's what I was saying, Dynacor.
They've been in the business a little bit longer than us. I think they started about 7 years prior to us in the ore processing business in Peru. Their plant is about 5 kilometers away from our plant. And
Dynacor, by the way, is at almost an all-time high. Probably they're at an all-time high in terms of market valuation because they would have issued shares over the years. And they have not really been affected in this downturn. And one interesting thing I'd like to point out about Dynacor, they're paying a near, a 3% dividend, which I think at some point, you don't have to say this, but I think you guys will be able to do once you get sales ramped up enough.
Yeah, absolutely. I mean, that's something that being a cash flow business, we get that question quite a bit. When are you going to pay a dividend? And my standard answer is that once we fill the plants, which we've now increased it from about 100 tons a day to 225 tons a day, and so we're about 50% capacity right now, then we'll be making a good sizable amount of earnings, and we'll be able to, that's one of our goals, is to get a dividend back to shareholders.
Yeah, and I think that's that's an interesting aspect because a lot of mining companies, and now you have your ore processing, so a little unique, but are paying really good dividends right now, which I've never seen before. Actually, a lot of mining companies have kind of become cash flow machines, which I've never seen before.
Metal prices the way they are, they should be.
Yeah, and they're not making stupid decisions right now. I think the stupid decisions that were made from maybe 2006 to 2011 were kind of weeded out. And I'll give you another example here, which is, I'm looking at Newmont for a second before we talk a little more about you guys. Newmont is paying, again, almost 4% dividend, which again, in mining is very unique and rare. You usually don't see those kinds of dividends. So if you want to talk a little bit about the quarter and those results, I'm going to put them back up again.
Yeah, sure. I think it's all been driven by this non-dilutive prepayment gold facility that we've been able to get in place. And we started in Q1 of this year, where we got this prepayment facility. We took a total so far this year of a total of $11.5 million US. And it's like a prepayment facility where we don't pay this back in dollars, we pay it back in gold ounces that are produced in our plants. So we paid about $3 million worth of value of gold back to them so far. and we still have $3 million to be able to draw down on of that 11.5 million. So I guess where it's interesting right now is that we've gone from about 100 tons per day to 225 tons per day of our 450 tons per day of capacity. And this is where the leverage is built into the company. We haven't had to really add anything to our headcount, any significant amount of people to be able to have that 150% increase in production. So it's all been driven by this ability to be able to purchase the mineral, pay for it in a timely fashion, and then process it and then sell the gold. And that's really what our business model is all about.
The non-dilutive thing is also a really key, in my opinion,
Mm-hmm.
because one issue we get in these junior mining deals is, if you actually go look at a lot of junior mining companies, not just juniors but seniors, you look at companies right now compared to where they're in 2011, you can say, oh, a lot of them are down 50%, the HUI or whatever from its size, but a lot of them actually have record high market caps because they've had to dilute so much. As juniors, usually have to issue shares and warrants and the whatnot to keep operational. So
Yeah.
I think having this kind of non-dilutive thing is key. Like there's a couple deals I own that because they have a little bit of cash flow, they haven't really had to dilute a lot in the 5 or 10 years, and that makes a difference. So
Yeah.
it's all nice. We like to invest in deals and we like our private placements and our warrants, but on the other hand, it's nice when a company doesn't really dilute at the same time.
Yeah, and I think that's something that we all keep in mind here, and I think we're a testament to that this year. Where raising this $11.5 million US gold prepayment facility is equivalent to what's that, over 15 million Canadian, and our market cap is 14 million Canadian, and we didn't issue any shares, any warrants, or any options in relation to this facility.
Yeah, so what I wanted to show to you, this is a chart going back about 4 years. And I personally really love this chart that you guys, you were kind of like, following in 2018, 2019, then bottomed right before COVID started and had that nice spike in 2020. But then you've kind of, had about a 50% roughly retracement. And what I love is this action that's been going on since April. I know it might be kind of boring for a little bit, but this is like what in technical terms we call coiled spring, where you've got like this kind of low volume and no volatility. And usually that is followed. You kind of had that at the bottom, in the first quarter of 2020 as well. But this one's even going along even longer. And actually there's another saying called the longer the base, the more the space. So probably when you can break out of this and go above, say 40, 45 cents a share, it looks like you could probably make a run, to $1 and above. And it looks like to me, and one thing we were talking about off air is essentially, it looks like to me that what's going on is that the gold stocks are essentially like, they're very cheap compared to the price of the metal. It's $1,800 gold. You can make good money, but because there's a lack of interest, because all these other assets are going crazy, from crypto to the stock market itself to, mem stocks. Uranium. Don't worry, I got a lot of stuff in uranium, like a lot of guys I know, and I think the fundamentals are there for uranium, but on the other hand, it's pretty extended in the short term, and a lot of base metals have done well. So it's like everyone's kind of ignoring PMs. So I think you're seeing this tax loss selling, which will probably occur to the end of the year. And then you're going to get some great opportunities probably going into next year, especially if gold can break above 1,800 and maybe start moving back to those all-time highs.
Yeah, let's, I like the gold price right now at 1,800. We're happy with it. In our business, we like, we make money whether the gold price is $1,000 or it's $2,500. It just means that we are going to have to pay a little bit more for that ore when it comes into our plants. But in any case, there's more supply, and there's more miners out that are looking to bring ore to our plants when there's a higher gold price.
Yeah, I'm just going to show people the GDX. I know it's come up to GLD, but I'm just trying to show. I was going to do it over the last year. I don't need a long-term chart for this, but you can see, where it is, and like, I know it's popped up a bit recently, but still, like, this is historically a very low level.
Sure.
And, you know, you essentially it just means that, you know, gold stocks now compared to gold are probably 15-20% cheaper than where they were earlier in the year, you know?
Hmm.
So, you know, and like I said, like the thing is we get caught up with, you know, gold having to go to 2,500 or 3,000, but it's, you know, when I started out in the late 90s, gold was $250 or $300 an ounce.
Yeah, I
And it's
remember.
like, if you told me that 20 years later, when I started out, we would be 800, 1,800 an ounce, I would be ecstatic. I would think
Yeah.
that everything would be booming. you
Yeah.
know? You know, so
Well, if you can't make money at 1,800, then it's pretty difficult to make money. I'd say you've got some operational issues that you need to take a look at, or you've got, you know, a very high cost mine.
well, and also you should know that you're actually going to Peru. You said you told me shortly for the first time in a while since COVID started.
Yeah, there's 3 members from our team that'll be going down next week for a couple of weeks, and we're going to the plants and up to our ore facility in the north. So we're taking a tour of the country for the first time in probably 20 months.
Okay, that's great. So you can tell me how that, maybe in a few weeks or a few months, you can tell me how that goes.
Yeah, you bet.
You know?
Yeah.
Yeah. And actually, I was telling Edward off air too that I would like to go visit the property there next year.
Let's book it in.
Yeah, yeah. So I'm sure traveling is not the funnest thing in the world right now. So
That's for sure.
but you can't just stay in your box forever. So anyway, I think we'll just leave it at that. So you guys have had record revenues. In terms of, by the way, I guess one thing we should kind of expand on with the revenues. Are you close to profitability?
Yeah, well, actually, at these levels here, we're seeing on just in the last couple of months, and particularly last month, that we take a look at our P&L every single month and see what it's at, and we're in the green right now, and we're at these levels. We continue to do this, and we're hoping for a strong end of the quarter here, end of the month for our. I guess this is our end of our Q2, fiscal Q2, which will be released, and we'll be able to see the results in that.
Okay, that's great. So, okay, so we'll leave it at that. And yeah, it's again, it's very unique because you guys have cash flow, and you have you're increasing like processing or production, and that's a difficult thing to find in a junior mining company, and it looks like you won't have to dilute any time soon as well.
No, especially with this gold prepayment facility, they're real keen to be able to work with us. It's something that is different than what they normally lend to in the precious metal space, but they get an immediate payback. So that's it's nice for them as a lender as well.
Okay, that's great. And we'll speak in a few weeks or a few months.
Sounds great. Thanks, David.
Okay, that's done.